What is good, YouTube? Charon FX back again. Listen, if you have a small account which you are trying to flip this coming weeks, make sure you watch this video to the end. And also, if you're trying to pass your funding challenge this coming weeks, make sure you watch this video to the end, because somewhere in this video I'm gonna break down a 200 pip move on this pair. I repeat, somewhere in this video I'm gonna break down a 200 pip move on this pair. So make sure you stick around and watch this video to the end. And also don't forget to subscribe, man. Don't forget to subscribe. Hit that like button. Drop a comment down below. Turn on post notifications and share this video with your family and friends. And also, if you are interested in my one-on-one mentorship, DM me on Instagram. The link is in the description below. Alright? Just DM me. So with that being said, let's just get to business. So taking a look at Euro NZD or Euro New Zealand dollar, what do we need to do first? First of all, we need to identify our trend. I've always said this. First of all, we need to identify what our trend. And looking at our chart, what trend are we in? We are in an uptrend. How do we even know we are in an uptrend? So all what we need to do is to identify our market structures. All right. So let's start from here. So at this point, we can see price created this lower high, which came back down to create what? A lower low. All right. After this lower low was created, what did price do? It went back ahead to create what? A new higher high. At this point, we can say price has changed from bearish to bullish. Why? Because it created what? A new higher high. You get me? Why is this even a higher high? Because this high is higher than that of this high. You get me? Good. So after this higher high was created, what did price do next? It retraced a little bit to create what? A higher low. Why is this a higher low? Because this low is higher than that of this low. You get me? Good. So after this higher low was created, what did price do? It continued back to the upside to create what? A new higher high. Why is this a higher high? Because this high is higher than that of this high. Okay, so after this higher high was created, what did price do next? It came back down, or it retraced back down to create what? A new higher low. Okay, after this higher low was created, what did price do next? It rallied back up again to create a new what? Higher high. Again, why is this a higher high? Because this high is higher than that of this high. Not just because it's higher than that of this high, but also price closed above it. That's why this is considered as our new higher high. Alright. So after this higher high was created, what did price do next? It came back down, rejected this higher low, pushed back up, came back again, rejected, pushed back up, came back again, and finally they went back up and created what? A new higher low. Somebody may ask, why didn't I consider this as our new higher low? Because this structure right here never closed below the wick of our what? Our higher low. It just rejected it. So price closes below, or so price closes above a structure level. It's not a break of structure. To me, it's not a break of structure. You get me? Good. So from here, we can see that this higher low is higher than that of what? this higher low. So this becomes our new higher low. So after this higher low was created, what did price do again? It went back up, closed below its previous or higher high, and created what? A new higher high. You get me? So from what I've just done, we can see that price is creating a series of higher highs and higher lows, which tells us that we are in a what? We are in an uptrend, or we are in a bullish trend. Alright? So now let's go to the H1 time frame, and let me teach you all, or let me put your game, and let me give you all the source. But now I cut a little sum on this retracement. So coming down to our H1 time frame, alright? If I'm to go back in time to this point, okay, what can we see? We can see that price is trading within this channel right here. Yeah, we can see that price is trading within this channel. Okay. And from my experience, okay, there was no way I was going to take a trade after the breakout of this channel. You want to know why? Because looking at the channel very well, we can see that there's a possibility that price is creating what? An inverse head and shoulder pattern. Okay, so all what I did was I'm only going to take a trade only if price is able to break above this resistance. Do you get me? But in case price gets to that resistance and rejects it, it means price is coming to form its what? Right shoulder right here. Do you hear what I'm saying? I repeat, I'm going over again. What I'm saying is, under normal circumstance, okay, under normal circumstance, if price is to break out from a channel like this, you are good to go in for buys. Okay, but from my experience, what I can also see is price was what? Creating what? An inverse head and shoulder pattern. You get me? So all what I told myself was, I'm only looking to enter, though price has broke out of this channel, I'm only looking to enter for buys only if we break above this resistance right here. That's when I'm only looking to buy, or that's when I'm only looking to go in for longs on this pair or on this trade. But in case price gets to this resistance and gives us a what? A bearish confirmation candlestick, I'll go in for sales because it's likely that price is about to create its other half of the chart pattern, which is the right shoulder. Okay, so then if I get the confirmation candle, all I'll do is I'll enter the trade right here. Okay, put my first take profit right at this left shoulder. And in case price gets here and fails to create the right shoulder and breaks below this left shoulder, where will my second take profit be? It will be at this low right here. This is where my second take profit is going to be. You get me? So that was my thought process when taking this trade. Alright, so now let's forward it to see what price did. when it got to that resistance. Boom. So after price got to that resistance, did we break above it? Did we break above that resistance? No. What candlestick did price give us after the bullish candlestick got into the zone? We had what? A shooting star candlestick or an inverse hammer candlestick. Okay, but that wasn't enough for me to enter this trade. All what I did was to wait for price to print a next candle or a second candle. And what candle did price print? It printed what? A bearish candle. Okay, it printed a bearish candle. Looking at these two bearish candles, if you are to add the volume of these two bearish candles, we can see that the volume will engulf this bullish candlestick. You get me? So after price printed this bearish candle, that's when I went in for shorts. Placed my stop loss right above the wick of our shooting star or our inverse hammer. Okay, and my first take profit at our left shoulder level. And where will our second take profit be in case price gets to this level and fails to create the right shoulder? Or where will our second take profit be in case price breaks below this level? This is where our second take profit will be, at this level, at this support level. Okay, so now let's continue to play to see how it played out. As simple as that. As simple as that. Take profit just got smashed. Do you get what I'm saying? Our take profit got smashed. As simple and easy as that. In case you don't understand anything I did, please replay the video. I watch it over and over again till you understand. You get me? So this is how I caught, about 100 pips on this retracement. Alright, risking 30 pips to make 109 pips, which gives me a risk to reward ratio of 1:3.64. As simple as that. Alright, so now let's get to the 200 pip move. The 200 pip setup I was talking about earlier on. Alright, let's get into it. Let me clear all this so we have a clean chart. Let me clear all this so we have a clean chart. Alright. And let me also zoom out so it becomes clear. So going into next week, what are we looking at? Of course, we are expecting price to break out of this channel. Yeah, that's the first thing we're looking at. We are expecting price to break out of this channel. But not just break out. After price breaks out, we are expecting it to retest this resistance again as support. After this resistance is retested, what will we be waiting for? We'll be waiting for a confirmation candle for us to go in for longs or buys. You get me? In case price fails to retest this resistance and comes a little bit down, we expect price to retest this resistance too. Right here. In case price fails to retest this first resistance and comes down, we expect price to retest this resistance. I think retesting this resistance will be much better because at the same time we'll be retesting the trend line. Again, we'll be retesting this trend line. Again, so after we retest this resistance / trend line, what next will we be waiting for? We'll be waiting for what? A confirmation candlestick a we'll be waiting for what? A bullish confirmation candlestick, all right, for us to go in for longs. So please take note, all right? This is what we'll be looking for going into next week. And also, like we saw earlier on, our H4 is in an uptrend. We saw that series of, higher highs and higher lows being created, telling us our H4 is in an uptrend. Also, as you can see, our H1 is also in an uptrend. You get me? So if I'm to take my Fibonacci and draw from this higher low to this higher high, we can see that price created this double bottom at our golden zone, which is our 61.8% level. You get me? So in case price is to rally up and get to our higher high, which is also our Fibonacci 0% level, and this higher high can hold price, and price breaks above this higher high, where will be our next target? Our next target will be our Fibonacci negative 27% level. You get me? This will be where we'll be targeting next. Alright. Yeah, this will be where we'll be targeting next for our take profit, probably our second take profit. You get me? So our first take profit will be at our 0% Fibonacci level / our higher high. And our second take profit will be at our negative 27 Fibonacci extension level. Alright. So take note. And if you are to measure from that resistance, or if you are to measure from the breakout of the channel to our negative 27% level, we can see price will move about 238 pip. Yeah. So we are expecting a 238 pip movement after the breakout of this channel. You get me? And also, I have something to tell you. As much as a trade might look right or look good, it could lose. I repeat, as much as a trade could look right or could look good, it could lose. So all you need to do is you need to apply proper risk management. Do you get what I'm saying? Yeah, you need to apply proper risk management. That's what we need to do, or that's what you need to do. Alright, as simple as that. As simple as that. So this is how I like to end my video. Alright, this is how I like to end my video. So going to next week, this is what we're expecting on Euro New Zealand dollar. Alright. So this is how I like to end my video. But before you click off this video, before you click off this episode, don't forget to subscribe, man. Do yourself a favor and subscribe. You get me? Like this video, drop a comment down below, turn on post notifications, and share this video with your friends and family who are still struggling when it comes to trading. Alright, share this video. And also, if you have any questions to ask me, man, DM me on Instagram at CharonFX. In case you don't find it, a link is in the description of this video, right? Hit me up on Instagram. In case you're also interested in my one-on-one mentorship, DM me on Instagram. Right? DM me on Instagram. So with that being said, I'll see you in the next video. CharonFX, I'm out. Peace.